Hey everyone, and welcome to Stock Talk on October 15th. So initially I was going to forego today's Stock Talk because I was looking at the chart initially. I was like, well, it's not doing that much, right? Yes, there were some fluctuations intraday in the indices, but compared to the prior few days, this was nothing, right? We weren't having that much movement. And then I come back at the end of the day to look at the charts, and it changed dramatically. So I'm going to take you guys to the intraday chart of the SPY, which tracks the S&P 500 or the broader markets, which we look at for general market direction. Here's SPY, and here you guys see this massive down move that occurred at the end of the day, right? And you guys can see how we gravitated towards the $274, which is my red line. Now, why was that line significant in the first place, right? Initially, I wasn't too concerned because yes, we bounced off of this line in the past, but this line is the line that corresponds to the 3-year weekly chart or the 50-period moving average. We were monitoring this line last Friday because we were concerned about the Friday's close. Remember, when we're looking at the 3-year weekly chart, we are really concerned about the opens and closes of that candle, not the intra-week movement as much, right? So you guys can see today, Monday, we are now right at the 50-period moving average again. So you guys have to imagine these scenarios playing out, right? Can we dip from this area? Does this support have to hold? Not right now. We can start dipping either Tuesday, Wednesday, or Thursday, and then Friday is the day in which we would want to reevaluate if we're below the 50-period moving average, how far below, and are we able to recover? Are the bulls able to recover back to the moving average by Friday? But what this tells us is Tuesday, Wednesday, Thursday, even Friday gives us the opportunity, especially earlier in the week, tomorrow and the day after tomorrow, give us the opportunity for us to go lower. Okay, so that's the first thing I want to show you guys. And the second thing is look at this yearly chart. What do you guys see? I always say, I need to see some sort of green candle first before I talk about a potential bottom. Where's any green candles in the recent movements? There has been 0 green candles, right? We've gapped higher. Yes, we did in previous day. This is Friday, right? We gapped higher from the low, but we sold off. What happened today? Well, we went lower, initially opened lower, and sold off. What's happening? This is obviously pressure to the downside. So pressure to the downside, that's pretty much what you can see from the charts. What is this boxed area? This boxed area, remember, it represents this from around 270.80 to around 276. This is the general area of support, right? Because we've at the very least gapped higher at that point. But the question is this going to be a support that holds? Based off of this chart, it obviously says that we want to go lower than this point, right? If we undercut this red line, we can certainly go to the next major support line of 269.40. Remember that the 269.40 level is where everyone's eyes are going to. Wall Street knows that the technical investors are all looking at that line because we have reaction lows, as I've talked about on the 3-year weekly chart. We've had reaction lows, okay? See this support line right here? Held as support here, right? And we have had a low here, right? And we've had reactions in the past. Everyone's looking at that line. So you have to ask yourself, if we get down there, does that line have to hold? And I think we talked about that on the weekend Stock Talk. No, it doesn't have to hold. As a matter of fact, we could certainly surge below there before recovering. Now, the question is if we go down, right? If we go down, which area can we start looking for some sort of recovery? And that is, once again, a very good question because you can see from this support to this support, this is nearly a $10 range on the S&P 500. This boxed area is testing the low of the previous candles made in March, April, and February. Okay, so so we really have to be monitoring the intraday in terms of a reversal back to the upside. Okay, reversal back to the upside. But it could occur somewhere in between this area. Remember I gave you guys the two scenarios? One scenario was going up, testing this resistance area 280 before falling, right? And the second scenario was we perhaps go below the support line of 269.40 before recovering back higher, right? So those are the situations that I'm monitoring. But based off of just today's movement, right? We had to really, the first scenario that I just talked about, have to put it off to the side just a little bit because we weren't able to test the resistance. The second scenario, all of a sudden seems more plausible. And this is all about, this is what we do as technical analysis and looking at the charts. This is what we do, and this is what we think the probability will lie just based off of the opens and closes and the intraday trading range and the candle that's formed today. That's how it is. So, guys, there's the S&P 500, and, things could get worse before it gets better. That's what I want you guys to keep in mind. Now, let me tell you something else, right? You might be asking, well, what about the upside? Can you see any upside tomorrow or the day after tomorrow? Well, once again, if we have an upside, then we would have to, at the very least, retest this area, right? Perhaps the 50-period moving average, retest it when? During overnight hours, during the future hour. If the futures start getting to the 274 and keeps bouncing off of that level, right? Potentially, that could be holding as a support in that case. But we would have to see that on the futures, right? On the futures. So, of course, I'll be monitoring futures as well. If you guys were looking at futures and looking at intraday, maybe you got a headache from just looking at this movement, because at one point it goes up 80 points and then the Dow goes, back down a little bit and then goes to plus 100. It goes back down. It was just like a wave pattern today. But what was it actually doing? It is obviously a consolidation pattern, right? You guys can see here's the 20-period moving average sloping down. We aren't even there. Here we got rejected the 20-period moving average before getting, where's the 20 period? It's all the way back up here. And what's price doing? It can't even recover and, trying to get closer to the 20-period moving average. It can't even do that. So think about just the market direction at that point. So anywho, let's take a look at volatility, or TVIX. And in the meantime, once again, I would like to thank everybody for commenting on my videos and just, talking about those tickers, talking about questions. I think someone had a question about crude oil. I forgot what the question was, but, keep commenting because I do read all those comments. And, I think someone was asking about the trend of crude oil in the next few days. I'll talk about that in a moment too. So, keep that coming. Thank you very much. Please hit the thumbs up button, as you guys know, if you enjoyed the video. Here's volatility, TVIX, and you guys can see I've drawn in, and pretty much I haven't drawn in anything actually. This is the same lines I've had the past few days. I put you remember this boxed area? What did the boxed area represent? Right? It was a gap fill area, right? So once again today, you guys can see that this general vicinity once again acted as a resistance. Is this, a surprise? Not really. But you guys can see volatility today, for the most part, was consolidating. What was interesting was, volatility didn't drop that much. And did we expect volatility to drop that quickly? No. Remember on the weekend stock talk, I told you guys I don't expect volatility to start dropping significantly because we are in this situation in which we have bearish tendencies that's really pushing us to the downside. So here's volatility. Can this one go higher? Sure it can. If SPY breaks the near-term support, if I take a look at the SPY, right? What was the near-term support? 270.36, right? That's the low made on, I believe this was Thursday. If we break the low at that point, can TVIX break the high? Sure it can. It can surely go over $48 and possibly even $50 at that point. So keep an eye on TVIX. I think TVIX, if you're doing day trading, could be a potential play every single day. So just keep an eye on that. I'm not advising you to buy into TVIX because there is risk involved, but volatility is staying up there. So yeah, that's that. Let's take a look at a couple of commodities. We'll start with crude oil, 4/CL. So once again, thank you for your comment about crude oil and about, what direction am I seeing? So right now, I talked about how the short-term trend for crude oil seemed to be heading lower. However, looking at the long-term trend, I give you guys the yearly chart right now. Is the uptrend broken? The answer is no. Could we come down and spike lower before recovering back up? We still can, right? We still can. Here's the 150 period moving average. We've kept it in the past. Here's the 200 period moving average. We kept that in the past. Can we come down a little, spike perhaps even below the support line, and then recover higher? Yes. Would it have a harder time if markets were pulling down for crude oil to recover? Yes. So hence, I'm monitoring the markets as well as crude oil. But right now, remember, my position was I would be perhaps looking to short crude oil over 76 or to 70 or even a little bit higher, right? But right now, we're in this middle ground, and it's call it a battle zone or whatnot, but it's not a comfortable position, if you guys can imagine it, to go long or short. And then that's just my opinion. So 4/CL, that's for you guys. 4/NG or natural gas. Natural gas, you guys can see this is a hard pattern to play, right? It's a hard pattern to play because why? Well, you guys can see that we are on an uptrend, right? We are on an uptrend, but we had 3 red candles. Usually 3 red candles signify a potential leg lower. So you guys can imagine, if you were shorting natural gas, it's difficult to trade because today we went significantly higher. As a matter of fact, 3% higher. But the thing is, you can ask yourself, how do you know that if this candle isn't sort of like these candles right here, right? What if we come up, perhaps make one more candle appear, can't close above the previous high, and then starts dropping again? You don't know. That's why this is a hard pattern to trade, because we initially broke below the support, and then we gapped higher, and that's that. So overall, if you ask me to look at this pattern and you said, what is the general trend? The general trend is still to the upside now, but this could radically change. Hence, I'm not a willing participant up here at this level. Perhaps if we get to the resistance of 3.400, that's the area where you might be more comfortable taking an inverse natural gas position, or DGAZ, right? This is something that we've talked about. So you guys can see how lopsided this chart looks. It's just kind of unfortunate if you're kind of guessing your positions into natural gas. All right, 4/GC gold futures. Gold futures, right? Looking pretty darn good. I was looking for possibly a retest of my boxed area. Didn't happen, of course. And there you go. There's the, gold is pushing higher as we expected. So if you guys took a position with JNUG, which follows gold, great job. And this is looking pretty positive. Can we come down, possibly retest? Sure we can. We can certainly consolidate. Here's the 20 period moving average. It's still below the support line, right? So we can certainly go sideways a little bit, even come down a little bit before that next push higher. But that's something for you guys to monitor. But what were we looking for in the past? An impulsive break closing over 12.11, 12.12. That has occurred, and you guys can see gold is bullish. Hence, technicals work for the most part. So JNUG is the one that you're concerned about if you're looking for gold. And, JNUG, this is a pretty okay pattern right now. You guys can see that we did feel a gap that was made previously, and we might come down a little before recovering and going back to the upside. Keep that in mind if you are in gold. Good. Guys, if you enjoyed these analysis, we do these analysis in our chat rooms. Pretty much when special events start popping up, if we get, that push to the downside on the broader markets, we talk about trends. We talk about support resistance lines. We talk about areas in which we could potentially even possibly enter specific positions. So, take a look at the course if you're interested. The course is in the description box down below, and you guys can just ask some of the members in the course. I know people traded TVIX today. They were very successful doing so. They told me. And then I know some other members traded, volatility in the past, made 10%. So, and that's what you guys can do. And these are the concepts that you will learn in the course. The course is a video course, so it's a kind of video lesson library. So yeah, check it out if you want to. Okay, so let's get to your comments. Started with Trader Princess. I love your analysis. You're welcome. And thank you for commenting on the video. I see you here often, so thanks for that. Ben, let's take a look at Lulu. Do you think a recent dip buy? So with Lulu, I do like this trend, right? But the thing is, you have to keep in mind the broader markets. If the broader markets are going to push down as we expect, right, this broken pattern can even look more broken, right? You might think 144 is a good price right now, but what happens if it drops to 130, right? That's $14 per share off of your price. That's just something you have to be monitoring, I think. I like this pattern. This is a good pattern. We essentially filled the gap that was made due to earnings, but are the markets going to push higher? Airs Tooth, love the analysis. I totally agree with you that Wall Street's leaving us guessing this time too. And Wall Street, yep, we are watching those levels, and that's why we do not want to get falsely tricked into the wrong positions. Rico, thank you for your comment. K9, IRM, Iron Mountain. So this is a declining pattern. You guys can imagine as markets are pushing lower. This one's pushing lower. And what kind of, if you're shorting this, you might be okay actually. So the question for you, are you shorting this pattern? If you are shorting this pattern, then you're good. If you weren't shorting this pattern, you're essentially, and if you're shorting right now, you're essentially playing on earnings, which comes in 10 days, right? So, if I look at this chart on the long term, it looks okay, right? We have a surge up, and then we're just doing this horizontal pattern. But once again, are you willing to play off of earnings? That's a risk reward that you have to identify. But then in the near term, if I just take this in the yearly chart and you look at this, this is a bear flag pattern that's likely to play to the downside, right? So obviously we'll give a little bit more weight to the 3-year chart, but at the same time, 10 days, that's the deciding factor. Keep an eye out for that. Your near-term support, yeah, is around down here, right? That's obvious, $31. So, all right. Rocky, always learning. Gush drip, what are your thoughts? So, Gush drip goes similarly. It's not exactly one-to-one correlation, but similarly to crude oil, right? So Gush is pro crude oil. So crude oil, once again, is in a precarious situation. Are we going to force into a trade if we're in the middle area, right? It's almost like, let's look at IRM, right? And K9's ticker. And we said, hey, are we going to go in like right over here when we were trading? Like, what do we do now? It's kind of difficult to tell what we do now. Or for example, if we were in the middle, like if we were trading in this middle area at one point, we were closed over here, and you asked me, what do we do now? Well, that's a difficult, it's a difficult area because we are in previous resistance areas, right? We're in the middle of the chart. So the question is your risk reward worth it? So that's something you have to identify. If you feel comfortable, then by all means take a gush or drip position. Travis, where does AMD go from here? So stressful. AMD, here's the deal with AMD. I think we've talked about this many times. Support lines around 25.56, right? And you guys can see we're keeping over the support for now. Isn't that interesting, right? So the thing is, markets first has to recover first. That's number one. But if we're managing to keep over the support line, and once again, I do not change these support lines, it could potentially move higher. Right? It could, but we need markets to recover first. So right now, if we can actively close above this level, 25.62 around that level, I think we are good. But once again, earnings 10.24, right? Isn't that next week or the week after? It's pretty close by. Have to keep an eye out for that. Good luck if you're in it. Draxon, thank you. You, Ben, everybody. Thank you for all of your comments. What are you guys going to be doing tomorrow? Well, you might be at home, you might be working, or you might be watching the charts or a combination of both. So, of course, be on the lookout in the charts and take a look at what happens tomorrow and pretty much in the entire week. It's going to be very interesting very quickly. So, yeah. Anyways, guys, thanks for watching this video. See you guys tomorrow.